I apologize that I'm late today. I take full responsibility. I am late for today's class. I will chop my neck again. Here we go. I'll do the other side again. Two chops once again. And no, that wasn't fucking soft. You're gonna see that shit get red. Look, this one's already getting red in like 5 minutes. So I'm holding myself accountable for being late. Not gonna blame it on anybody other than myself. There was just too many NPCs today in traffic holding shit up. So it is what it is. Jesus, look, you can already see it. All right, so apologize for being late. How many of you guys saw yesterday's recording? How many of you guys saw yesterday's recording? Cool. Did that help? Did that clarify? Did that indeed change things for you? Yeah, right? I'm telling you, like for those of you guys that probably did not understand or didn't realize certain things, when you rewatch the recording is when it's like, because sometimes when it's your first time, you're not gonna get it immediately, and it's okay. So let me get comfortable here. Jesus, look, this one was harder than the other side. I made 30K today. Wow, congrats. And honestly, pretty much there's no reason why you guys haven't made money right now so far in the boot camp. Because this trade we took together basically yesterday. I literally told you guys I entered on the shift of structure and the trade played out. So we put our stop loss above and the trade literally did exactly as we wanted it to do. It's a perfect trade. It is a rinse and repeat. Everything that I've been saying up to the boot camp is everything we've done right now. Let me turn off the chat for just a second. I didn't obviously tell you guys to enter the trade, but if obviously you guys are on the more experienced side, you could have executed the trade. A trade like USD CAD is a trade where if you would have entered it, you would have gotten wicked out. And that right there is a prime example of you getting wicked out. That is what's going to happen to you no matter what, sugar. You are prone to getting wicked out every single time you enter the market. You are prone to getting stop loss every single time you enter the market. You're prone to making money every single time you enter the market. So you're prone to a lot of things, and this is one of them. How do you avoid this? We've already talked about it. You can't. It's inevitable. It's part of the journey of the game. What we could do with this trade right here is be interested in re-entering at the next shift of structure. So this is the lower high on the 1 hour. This is the lower low. If you still want to enter this trade, you would have to wait for the shift of the structure, the shift of this lower high to this lower low, wait for it to go bullish, and then you can enter your trade then there. Or if you want to use the 30-minute time frame, once it shifts above this lower high, this is the lower low, which we're going to body candlestick closure above that, and you enter on the engulfing or on the retest, whichever one you would like. But at the end, and the same thing for the 15-minute. I would count this as the 15-minute lower high. So what matters is that at the end of the day, you know exactly what you're waiting for and what has happened. If that makes sense, say yes. If not, say no. Say yes or no. And again, this trade right here, we literally did not take or be interested. And this is the beauty of the strategy because you literally know one, you are entering the trade not at an area of interest. So when we start grading trades and we start getting into actually using the strategy, which by the way, this is the poll. So 96% it makes sense. To the 4% that it doesn't, please watch the recordings. But some of you guys said, how do you avoid this? You can't. But the only way you kind of could is by having the most amount of confluences in your favor. And as you can tell right here, us not having the area of interest is one of those things that we could have avoided because we would have taken a trade only at an area of interest. We would have avoided this workout. So how do you avoid it? That's the only way to avoid it. Having the most amount of confluences. And even if you have the most amount of confluences, you still can't fully avoid it. But your chances of getting wicked out are a lot lower. Entity CAD is played out perfectly. paying out very cool. So thank you guys for waiting in today's class. So let's go to our notes. Whoa, so much shit going on here. All right. All right, cool. So we've talked about how to properly do a top-down analysis in the markets. Let me just get my notes over here. Sorry, guys. Give me just 1 second. All right, cool. So we've done a proper top-down analysis. We've done a proper way on how to enter the trade. And we know the only two things that we need to enter the trade are going to be the shift of structure and the entry signal. You want to have these happen before London session, New York session, or before New York session. The time frames you're going to look to enter a trade are going to be on the 15-minute, 30-minute, 1 hour, 2 hour, and maybe the 4 hour. But for now, we're only going to use these. We talked about the reversal patterns, which is the head and shoulders. The inverted head and shoulders are very easy to use. They're everywhere in the markets, and these are the things that you want to look at the actual entry point. And then we talked about how to put your proper take profit and how to put a proper stop loss. So before we continue on how to put it all together, let's have a quick quiz. And I want you guys to be paying attention. All right, cool. Check out the poll. Take your time. Sorry, guys, I have a little cold at the moment. All right. 7% left. All right, cool. These are the results. 91% put 1, 5% put 2, and 5% put 3. So 3, what does that mean? We're at the area of interest. Well, this doesn't look like it's even pulling back. This looks like it's having a push. All right, cool. So we're clearly not at an area of interest. 2, are we showing any signs of being on or on a way to a potential area of interest? No, that can't possibly be 2. We are clearly at a 1. We are at a higher high. Cool. Cool, cool, cool. That means that this market has to be which one? And this poll just confirms that there is a lot of trolls in here, or a lot of fat fingers in here. Either or. Not good. So, very clearly, this market is clearly bullish. Fantastic. Amazing. Now that we understand that it's bullish, we put our higher high, put our higher low. This is going to be mandatory for you to put this higher high and this higher low. Whoa, what the hell did I do? This is going to be mandatory for you to put the higher high and for you to put the higher low. So that means that we're now looking for an area of interest. Is this an area of interest? Yes or no? Okay. Okay. There's definitely some confusion here because literally 100% of you guys filled out this poll and 11% say that this is an area of interest and 89% don't. Why is this an area of interest? An area of interest has to have a minimum of 3 touches. To my understanding right now, this shit has 0 touches, 0 structure points. This, yes, would be an area of interest. We have 1, 2, and 3. Cool. And then this area, would this be considered an area of interest? Yes or no? Think about it. Look at it good. Because if you ask me, I'll be very certain on my answer. Think about it. Are you sure? Are you sure what you're answering? Think about it. Think about it. Listen to what I've said. It has to have 3 touches. Are you sure? Think about it. Last thing you want to do is chop your neck right now. If you get it wrong, you're going to chop your neck. It's so funny how I just influenced the poll. It was at 99% yes, and then it went to 4%, 5%. Yes, obviously this is an area of interest. Why would you second guess that? It's supposed to be systematic. 1, 2, 3, boom, area of interest, done. Nothing else has to be talked about. So in this pair, we have 2 areas of interest. Area of interest 1, area of interest, and number 2. If everything so far makes sense, say, actually, we're not even going to do that because it does make sense. Cool. Now what? What do we wait for now? I don't know. You tell me. I'm gonna find the pool here. All right, just tell me in the chat. What do you guys do here now? Correct. 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 Yep. Yep. Now, what we are going to do is patiently wait. We fucking wait. We're gonna wait for this price to now pull back. Now, pull back where? Are we ready to take the trade at this point? Type yes or no. Yes or no. Why not? Are you kidding me? This is a fantastic level of support and resistance. Why not? I don't get it. This is a great level of support. Why would we not buy here? Exactly. Because we would have shifted structure. Okay. Oh, so that means that we're bearish? Oh, okay. So that means that this is the lower low. So where does the lower high go? Does it go to point number 1 or point number 2? Point 1 or point 2? Okay. Very clearly, it goes to point number 1 because there's no real structure here on point number 2. Cool. Now what? Do we sell? Do we buy? What the hell do we do? Again, we do the same fucking shit. Wait. We wait. Wait for the trade to then have a retracement to an area of interest. Are we at the area of interest? Yes or no? Are you sure? But the wick hit it. The wick hit the area of interest. No, we are not at the area of interest. We're at the area of interest when we're at the fucking area of interest. Oh, okay, cool. Cool. We're at the area of interest. Now what? Take my trade and put my take profit and my stop loss and I buy a Bugatti, right? Or what do I do? Cool. Correct. We now wait. We wait again for the shift of structure because we understand that price has to have a retracement into this area and then it's going to go bullish into this area. And once it goes bullish into this area, we have to wait for it to then have the shift of structure and it turn in the continuation of the trend to the upside. If all this makes sense so far, say yes. If not, say no in the poll. Okay, amazing. So these are the results. That all makes sense so far. Cool. And now that we're at the area of interest, we can pretty much wait for our engulfing confirmation. And if we get it, we can enter it. If not, we wait for a little retracement and then we enter the retracement. Stop loss has to be 10 to 15 pips above the lower high or the structure point. And then our take profit has to be at a minimum of a 1 to 2 with it being set on the area of interest. So if this were to be the trade that we take right here, we would have to wait for the pullback. And let's say this would be the lower high, right? Obviously, this is so fucked up because like we're on the daily time frame and the pip sizing is wrong. But let's say that would be equivalent to 50 pips. We would have our take profit set at the first area where the market can have a reaction from, which is going to be this level right here, to create a potential reaction for once we get there. So if we have a reaction before that, we get our 1 to 2 and we bounce. If that makes sense, say yes. If not, say no. Amazing. Cool. Ladies and gentlemen, you have officially learned up to this point right now how to read the market. Literally, everything I have taught you up to this point is how to correctly read the market. Now, from this point forward, is going to be how to actually use the knowledge with a strategy. The part here that we are going to implement is how to actually execute everything that you have just learned. Because one thing is learn, like I've literally just taught you what Spanish is and how it was originated and how you can speak it. But now I'm going to teach you how to have a fluent conversation with it and sing karaoke with it and see what talents you can have with that. So up to this point, you're probably like, holy shit, I feel like I'm the king right now. But not just yet, because we are literally still only getting started. And to all of the beginner traders that were here literally without knowing anything, I know that now you're at the point where like, holy shit, shit's so clear. Or some people that were in intermediates were like, holy shit, this shit's so clear. And the people that were in advanced were probably like, well, I didn't see it like that, but I can now see it like that. Now, this next point is going to be the actual implementing and putting everything together. So if you guys are ready, say yes in the poll or say no. I see it and I can't unsee it. That's literally what I told you guys that was going to happen. You were literally going to not be able to see it beforehand. And once you see it now, it's impossible to unsee it. Adita, yes, brother, stop spamming the same motherfucking question. Yes, accept your loss and move the fuck on. Sucks, you lost. Go cry me a river. You're here to make money, bro. You know how many times I've lost getting wicked out because of 2 pips? Just move on, brother. You spam the question. I'm ignoring it because it should be an obvious answer. All right. So 97% of you guys are ready to move on. The 3% that aren't, respectfully, just watch the recording. That's really it. All right, cool. Let me just turn off the chat and get ready to move on. All right, so let me see where this is. All right. Wow, I have so much shit over here. See, like we're not even in the steps of like using the strategy just yet. We're just cleaning it up. 1 second, guys. Oh, did I delete everything? No. Cool. And all right, we need this right here. All right, cool. So, okay. So I want to talk about this right here, right? Which is, it's funny that I'm going to bring this up right now. So, ladies and gentlemen, what you are looking at right here is the set and forget strategy. What you're looking at right here is the list of confluences, the grade behind it. You're looking at the fucking shit right here. This is what took me 2.5 years to master, 3 years to really stick to it every single day. So you guys can take a screenshot if you want, but right now it might not make a lot of sense. It might be very overwhelming. You might get lost, but I'm going to explain to you how to correctly look at this right here because it's really not that difficult. And there's a very simple and effective way on how to read this. And there's nothing here that I have not taught you other than one thing, and it's going to make sense right away. And you know what? I'm going to just show you guys right now. Okay, so if this right here is the higher high and this right here is the higher low, if we keep going with the snake trick, so this is the head of the snake, we come down here, this is where the higher low is, this is where this is. We know that this is the highest point, this is the highest low point, but this right here, this is the previous structure point. So let me explain that again. There is a high point, which is the higher high. There is a higher low, which is the higher low. And then there is a previous structure point. Basically, it's the last higher high or the last lower high or the last, it's just the last structure point. That's really all it is. The best example I can possibly use with this is when this creates a new higher high. So right here, when we have a new higher high and a new higher low, when we put our area of interest, usually sometimes 50, 60% of the time, it tends to be here at this structure point. This structure point is the previous structure point because if you literally look left, it's the motherfucking previous fucking structure point. This is not the previous structure point because you just skipped over the previous structure point. Like this is literally it right here. This is clearly not the previous structure point because you just skipped the whole shit. The previous structure point is just the previous structure point. It's just this right here. And if you want to learn how to mark it correctly, use the head of the snake. You go, this is where you get the higher low. We all know how this works. And now to get the previous structure point, you keep the snake going. And when it turns again, boom, that is your previous structure point. Very simple, very straight to the point. It's really not that difficult. Like if I were to use, for example, this right here, right? This example right here. This move right here. This is the higher high. This is the higher low. Where is the previous structure point? I don't know. I don't know what the fuck it is. Okay, cool, brother. Not an issue. Head of the snake. Keep coming down. Boom, higher low. Okay, you keep the snake going. Whenever it turns again, boom. That is the previous structure point right there. Very easy. It's the second turn of the snake. This is the first turn, second turn. The snake will have no more turns. If it has any more turns, it's going to be a fucking roundabout. Very easy, right? We go over here. Boom, higher high. Then we have a higher low. Very easy, very straightforward, right? Higher high, higher low. Where's the previous structure point? Jesus, is it this one? Is this the previous structure point? Well, I don't know. Do the snake trick. This is the head of the snake at the higher high. First turn, higher low. Second turn is the previous structure point. That is the previous structure point. It's very easy. Now, why is this important? I'm going to explain in just a second. We do another one right here. Higher high, higher low. Where is the previous structure point? Well, higher high, higher low. You got the snake first turn. Is this a second turn? Not really. That shit looks whack. Second turn, boom, previous structure point. You guys get it? If you get it, say yes. If not, say no. It's very easy. Like, if you understand how to spot it, it's very, very, very fucking easy. Okay, so this is a great poll. 98% of you guys claim that you guys get it. All right, cool. So I'm going to put you guys to a test real quick. This is the higher high. This is the higher low. Where is the previous structure point? 1, 2, or 3. Think about it. Don't fuck up. You're going to chop your neck. Think about it. 1, 2, or 3. 1, 2, or 3. Are you sure? Okay. These are the results. 92% claim that it's number 2. 5% claim it's number 1. 3% claim it's number 3. All right. How do you fuck this up? Well, if you don't do the snake trick, head of the snake, snake, first turn, second turn, boom, previous structure point. You get it? It's very, very easy. Okay, but it's very easy when I show it, obviously. So let's see if I just do this. This move right here. Lower high and lower low. This is how the market would be looking right now. Where is the previous structure point, right? Is it at point number 1? Is it at point number 2? Is it at point number 3? Let's try this again. All right. Again, a lot of you guys are fucking up and you're going to have to chop your neck. Chop your fucking neck. Chop it. Do it. Because you're not doing the snake trick. And it's okay. After a couple chops to the neck, you're gonna start doing snake trick. It's very easy. It's really not that hard. Oh, oh, it's magic. You know, dude. If I would have pursued singing as a career, dude, I'd be the new Hannah Montana. I'd be. There was. I don't think I know one Hannah Montana song. All right, these are the results. 78% for number two. 18% chop your neck. 4% that put one chop your neck. Snake trick, ladies and gentlemen. You got blinded by the fact that I only showed the buys and the sells at the same shit. Head of the snake, snake. You keep going. Turn one. Turn number two. Previous structure points is right here. The easiest way is by the snake trick. Don't get set up. Come on, man. Your neck's gonna hurt. Oh, no Diddy. Respectfully. All right, cool. Oh, by the way, these are the, I already showed the results. All right, cool. This is the higher high right here. This is the higher low right here. Where's the previous structure point? Is it at point number one? Is it at point number two? Or is it at point number three? Which one is it? 1, 2, or 3? 1, 2, or 3? Take your time. Take your time. 1, 2, or 3? Well, seems like a lot of you aren't filling out this damn poll. Well, that's how this poll should have gone. But there is clearly some people out there that think they got to figure it out, and they don't. And it's okay. That's why we got to keep going with examples. 1, 2, and 3. Chop your fucking neck. Because it is none of these. The previous structure point is this point right here. How did you spot that? How did you know? Well, I used the snake trick. Head of the snake, high or low. I made it so easy. Turn one, turn number two. Snake trick, previous structure point. You guys are seeing the patterns now? It's the same shit. It's very, very boring. Okay, cool. Let's do it again. This is the lower high. This is the lower low. Cool, 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 cool. Where is the previous structure point? Is it at point one? Is it at point two? Or is it at point number 3? 1, 2, or 3? I'm like, so many people are gonna chop their neck right now. It is fan fucking oh, and the poll is not full. Take your time, guys. Do the headed snake, do the turn one, do turn two. It's okay. Take your time. I came today ready. I felt like shit yesterday. I drank my vitamins. Diddy saw me in the morning, and now I feel amazing. That's a joke, okay? It's a joke. It's a joke. You can't troll somebody that trolls themselves. Remember that. Life hack. All right, these are the results. Clearly, number one, it can't be because that shit's in the future, brother. This is how you're going to see this market. It can't, the previous structure cannot be the future structure, right? How the fuck does that even make any sense? It's a previous structure, not the future structure. So one is definitely out the picture. Chop your neck, double the strength on that one because that one, gotta be out your damn mind. Now, if you're confusing between 1 and 2 and 3, I can understand. If you don't use the snake trick, head of the snake, tailed snake. Turn 1 and turn number 2. Previous structure point. Get it? All this is going to take, like everything else, is just going to be practice. And you guys are going to see with due time how easy it is going to be able to spot the previous structure point. Now, let's do another example right here. Higher high, higher low. Where is the previous structure point? And point number 1, and point number 2, or point number 3. Previous structure point. Not future. We're not there yet. We haven't figured out a strategy how to use the future structure. Okay, these are the results. These are the results. The 1% that put 1, dude, just call your girlfriend and tell her you're cheating on her. Just do it. Trust me, that's the only way you're gonna understand. Because remember, if you're not cheating, you're not trying. All right, higher high, higher low, first turn, snake trick. That is the previous structure point. I'm just repeating myself at this point, and I know it is very clear, and it's going to be even more clear in the recording. Now, if all this makes sense up to this point, say yes. If not, say no on the previous structure point. All right, cool. All right, these are the results. 98% of the people understand, just fantastic. Watch the recording and you will get it for the remaining 2%. Now that we understand, I have literally taught you guys 100% of everything inside of my trading checklist. Now, today I want to explain to you how to properly read the checklist, not how to implement it. It's more on how to read it, how to really understand what the fuck is everything we've learned right now. And if you notice, a lot of things here are repetitive. If you notice, here you have a repetition inside of the EMA inside. So this is divided by sections. This is divided by the weekly and the daily section. This is divided by the 4-hour section. And then this is divided by the 4-hour and daily checklist. So this is just, well, and I'm missing the entry one. Where the fuck is that one? Let me see. Give me a second. I mean, the entry one is just so easy. I think that one's on Euro USD. If you guys ever want to hide something, like a note or whatever, just put it on TradingView, bro. Like literally put it in a text message somewhere all the way up here. Nobody, like your girlfriend, your mother, your cousin, no one's gonna be able to find it, dude. They're not gonna know how to even pull up to this. I think it's on GBP USD. Let me find. This is really gonna make me look through all this. Um, right here. I mean, you can use it. Doesn't really matter. Whatever. We'll just use it. No, no big deal. We'll go back to the entries and just because the entry is literally just two confluences. All right, we bring this closer. All right, cool. So this we understand everything that is on this checklist right here. There's not one thing that we haven't learned inside of this checklist. Everything is divided in different sections, weekly and daily. And then we have the 4-hour checklist. And then for now, I'm just going to remove all this. And I'm going to put entries, which is just 1, 2, So if you notice, everything is divided by different sections. A 4-hour checklist and a entry checklist. There's not one thing here that I have taught and you guys don't know. It's just divided by different sections, and they are used to grade the trade differently. If you notice, they have a percentage sign next to it, and that percentage is what we start doing when we start checking out our trade. So let's say we'll pull up to whatever USD CAD. We're like, all right, cool. Weekly and daily, is it bullish or is it bearish? Okay, that's that. Doesn't have the daily. All right, cool. Is it at an area? Is it at an area of interest? Yes. Is it touching the EMA? No. Do you have a candlestick rejection? Yes. Is it at the previous structure point? Yes or no? Let's just say no. Round psychological level? Yes. Do we have a pattern? No. On the 4-hour, after we do everything on the weekly and the daily, do we have the do we have the 4-hour checking the EMA? No. Do we have a candlestick rejection? Yes. Do we have a rejection from the previous structure point on the 4-hour? Yes. And do we have a pattern? Yes. Do we have a shift of structure? Yes. Do we have an engulfing? No. So when you analyze your trade, you start putting all of these confluences together, and then this is basically where you decide if you want to enter the trade or not. But the beautiful of this is that you know exactly what you're getting into. There is no surprises, there is no uncertainty, there is no doubt on if it's a good trade or not. You're going to grade your trade, and you're going to know exactly what percentage of that trade has a probability of going in your direction or not. So the way we do a grading system here in America, it's by a percentage basis, right? So 100% equals an A, 90% equals a B, 80% equals a B plus, but here we're gonna put C. 70% is gonna equal a D. 60% and below is basically an F, which is equivalent to failure. Now, the higher you are, the better. This is golden. Jesus, I hate when that happens. But okay, I'll do it again. So the higher you are in this grading system, obviously, the better you are. Now, I graduated high school with a D, which is basically damn near failing the class. And I passed high school with a smile on my face and with my degree. I have it on a frame in my wall that I talk about it all day. Didn't make it through college. I only went, 3 months, and I definitely failed, and that was the outcome of that. But I got the high school one, and I graduated high school with a D. Now you can decide if the type of trades you want to take are going to be a D, or the type of trades you want to take are going to be a C, or a B, or you want to wait for the A's. Now, I personally recommend to get as close as you can to both of these, either an A plus setup or a B plus setup. The higher the percentage the grade has, the better. The lower the percentage the grade has, the worse. Now, I'm not saying that a trade that's an F will never play out. That is completely false. And I'm not saying that a trade that's an A will always play out. That is completely false. What I'm saying is that the odds of this playing out in your favor compared to this one over the course of 10 trades will be greater. You're going to have F trades that you take that can give you a 1 to 5 risk to reward. And you can have 3 A plus setups back to back to back and lose every fucking single one of them. That does not change anything in the grading system. That does not change anything inside of the way you should read or use this checklist. It is just simply the way the market is reacting to the market, not to the specific strategy, because the strategy is something we adapt to the market. And this is going to be crucial for you to accept and understand simply because it is a game of probabilities. And by us doing everything that we're doing here, we're just trying to add as many probabilities in our favor as we possibly can. We never have the golden wand and we say, and we know exactly what's going to come out, even though we might make it seem like that. It's just because sometimes we just have a very high probability and we just know. And we don't know because we know because we have a wand. It's because there's a pattern in the probabilities. There's a pattern inside of the trades that we take every single time. The pattern in the winning trades, it's a fucking full-blown checklist. That's the secret. And I take trades that are like this. Now, does this happen every day? No. No, no, it doesn't. No, it doesn't. Will it happen every week? Maybe. Will it happen every month? Probably. But there's never a for sure, ever. What you know is that you have your game plan ready. You're just waiting for the market to give you the opportunity for you to go execute that game plan. The power in what I have taught you right now is not in executing what I've taught you. It's in waiting to execute what I've taught you. You have to fucking write that down. The power in what I've taught you is not executing what I've taught you. It's waiting to correctly execute what I've taught you. That is where the magic is. Because if right now you decide that, okay, you know what? Okay, I know where the market is. I get it now. Thank you, Alex. I had my aha moment. I can finally read the market and I know where it is. I get it. I fucking really get it. Like I know we're not in an area of interest, but we are touching the EMA and we don't have a candlestick rejection, but we are at the previous structure. We do have a psychological level and we do have a pattern. But on the 4 hour, we don't really have nothing, but we do have our shift to structure and our entry. I want to take the trade. That's why I'm gonna turn around and look at you and be like, all right, cool. You know what you're getting into, right? You only have 5 confluences when you can have the opportunity to have 12. You rather settle for 5 confluences than have 12. It's like you settling for a 5 at the gym just because she replied to your compliment, or waiting for the 10 to finish hitting the machine so you can approach it. You think that the 5 that just replied to you is a lock. Yeah, and it's not a confirmed lock. Like it's not a for sure thing. Just because she replied because she's a 5 doesn't mean that you're gonna take that trade. I would much rather take my chances and not fuck up the 10 and wait for her to finish the set. Because if you hit on the 5 and the 10 sees you getting the 5's number, when you go and try to approach the 10, it's just not going to be the same anymore because she's going to know now you're a fuck boy and like it's just the vibes are off. But if you play hard to get and you don't get at the 5 and you wait for the 10, the odds of you taking that trade are higher, slightly higher. Doesn't mean that it's going to change anything that now because you didn't get at the 5 to 10 says, fuck yeah, I want. No, no, no. That's not how it goes. But you don't come off as a douchebag. It's the same thing here. If you decide that you're going to wait for the 10, the market and your psychology and your mindset is not going to treat you like a douchebag because you waited for everything that you needed in order to take the trade. Now you can wait for her to finish the machine and you go up to her and she says, I have a boyfriend, which is fucking bullshit. But it's okay. You move on to the next trade. You can wait for all this shit and your trading immediately hits stop loss. And it's okay. You move on to the next one. I want you to know that this trading plan is going to be all you need to execute in the market. There is nothing else other than this. To add down here, this is simply 10%, and this is 10%. It's the same, like these two are by far the most important. Well, everything is collectively important. But I want you guys to really deeply understand that putting it all together, and I'm going to obviously show you guys many examples of us doing this and of us literally like, going deep into it and all that, but it's not going to be running out there and wanting to execute it. The importance is you know exactly what you are looking at, you know exactly what you're getting into, and you know exactly if you want to take that risk or not. I recommend for you guys to take these type of trades and not these. Now, don't look to your left and look to the right and look at me taking these trades and making $100,000. I could take the F trades because I don't give a shit and I know exactly what I'm getting into. Now, you as a beginner, you should start off your foundation by only looking for these. Now, as you get more comfortable waiting for the trade to play out, waiting for these confluences to be ready to be met, then you can start moving down the ladder and then taking higher risk trades. Because again, the worse the trade, the higher the risk. The higher the grade, the less risk. You want to take the less risky position that you possibly can because that is where you're going to have the highest reward. In trading, it's not high risk, high reward. It's low risk, high reward because your risk of losing is a lot less when you have more confluences than not. When you don't have as many confluences, your risk of losing goes up. So if everything up to this point makes sense, say yes or say no. I know some of you guys are probably laughing at my analogies, but I'll tell you what, you definitely understood. Let me say something. 5% left. Okay, these are the results. Amazing. Lovely. So, any questions so far regarding this? Why would you take a higher risk trade if there isn't a higher reward met with it? That's the question I'm asking you, Marcelo. I'm asking you that. But if you're asking me why would I do it, well, because I'm okay with the outcome. But that's what I'm asking you. Why would you take a trade that has higher risk and it doesn't have the higher reward? I don't know. I don't know why people would do it. The checklist has 105. Yeah, even better. At the end of the day, for you to have all of these, it's practically impossible. It's very difficult for you to have all of these. It's practically never going to happen. I mean, it could if it does, fantastic. And you're going to have trades that have this or more, but Why don't you look for the wrong psychological level in the 4 hour? Because it's the same thing. Roman, go watch the recording. There's no checklist on the 15, 30, 1 hour, 2 hour. No, it's just the entry, brother. Go watch the recording. Do you feel like the F trades cause you to know how the specific market you're trading in moves is through the history and it's going to move? Yes and no. Yeah, there's no checklist for the 15, 30, 1 hour, the 2 hour. It's just the engulfing. That's literally the checklist. Explain the candlestick rejection. I'll explain that in just a second. Trust me, it's all gonna piece together in just a second. I want to answer just some questions. I'm gonna explain the pattern in just a second, guys. Please be patient. Will we learn how to risk management? Yes. So all I really have to teach here is just this, but not really. It's gonna make sense in just a second. And then same thing with the pattern. Like this is just gonna make sense in just a second. You count wicks, so I'll explain all that in just a second. I followed your advice and now I'm single. Congrats, brother. Literally, none of this shit makes any sense. What is this? What is the success rate of the strategy? 110%. All right, cool. All these questions are literally about to get answered in just a second. All right, watch. All right, cool. Let's begin. I'm going to go through one example first, and then I'll take you guys through. So, pay fucking attention, okay? I want to do this once seamlessly, and you might ask me to do it again, and I will, but don't rely on me having to explain it again for you to understand it. Once is enough if you really pay attention. Now, obviously, I'm going to do it again, but save yourself the confusion getting caught up on one single point when all you have to do is just pay attention. So watch. The way you use the checklist, so this is the set and forget checklist, is going to be from the top down. Start from the top, right? So we're going to start like this. Let me start off by, I don't know, is there this right here? We start from the top down. Cool. Weekly and the daily. Are we bullish or bearish? Bullish. Cool. So this would be the higher high. and this would be the higher low. We would, so this is, you know what, I'm gonna do it really good the first time so there's no fucking confusion. You know what, let me do it better. I'm gonna do it like this. No point in overcomplicating this shit. Overcomplicating it already. Same price action, right? Well, very close. Just different time frames. All right. So we're gonna start off with the weekly time frame, like always. So we start from the top down. We start from the weekly, then the daily, then the 4 hour. And then after that, we reset, right? Because the first thing that we do is understand the trend. So let me just write up the 4 hour right here. Again, it's going to be very ugly, but I'm sure you guys are going to understand why I'm making it very ugly. Cool. 4 hour. So if you guys understand that this is all the same market, this is all USD CAD. This is just how we look on the weekly. This is how we look on the daily. This is how we look on the 4 hour. Say yes. If not, say no. The 1% that keeps saying no, I'm tired of your shit, dude. Can you please not? Like, why? Like, come on, man. I think we're already old enough to understand that. It just fucks up the stats. It just looks hideous. Like, come on. Let's not put that anymore. It's a bit unethical at this point. But 98% understand. Cool. So what do? First step, we start off with the weekly. You know what? Just for this example, we're going to put the 4 hour here. We start off with the weekly. Weekly, bullish or bearish? Bullish. This is the higher high. This is the higher low. Cool. Weekly, bullish. Daily, bullish or bearish? Bullish. All right, cool. Cool. Four-hour, bullish or bearish? Bullish. Cool. Easy. All right. This is how the higher high looks on the weekly for the daily. This is how the higher low looks like on the weekly for the daily. This is how the higher high looks on the 4 hour, and this is how it looks on the daily. It's same spots, don't want to accumulate it too much. This is how the 4 hour higher low looks like on the daily. The higher low would be somewhere up here. If everything up to this makes sense, say yes. If not, say no, please. The literal 2% of people that put no, please. If you really get it, put one. Okay. At least we have some heart now and some people understood it. So, you know, we went from 2% to now 1% in trolls. All right. We just need these last couple of guys to really not be trolls, but it's okay. So, step one is to understand the trend, right? That's the first thing. What do we have? 2 time frames in sync. Now that we understand, I mean, we have 3 time frames in sync. Hold on, let me answer this guy real. Okay, look at the shifter. Yeah, yeah. Okay, to turn on the radio on the Bugatti, click the button. That button right there. No,
This here?
no, no, no. The button under the
Oh,
shift.
this.
Yeah, that's it.
Okay, and then how do you use it?
Okay, so go to the steering wheel.
Okay.
Now
On the
click.
left side?
No, the right side. Click the Stabilizer Bugatti. Okay, right there, bro. Trust me, the same thing happened to me when I got it. All right, so click on it, and then you can just click on it. There you go.
Yeah.
Yeah, and that's it. This guy bought a Bugatti and does not know how to use the fucking radio. Same shit happened to me. It's like the weirdest shit ever. But okay, whatever. It's funny, right? Like you just get calls of your friends buy Bugattis, and then it's the fucking crazy shit. All right, cool. So the first step is going to be understanding where the trend is. Is it bullish or is it bearish? So here we have 3 time frames in sync. We have the weekly bullish, we have the daily bullish, we have the 4-hour bullish. Cool. So now that we have a minimum of 2 time frames in sync, we can then move on to the next step, which will then be finding the area of interest. Now, you cannot move into the next step until you don't have the first. If you were to have the daily bearish and the 4-hour bullish, you can then not be interested in this trade. If this time frame is bearish, and for whatever reason, this on the pullback here is then bullish or whatever, you cannot be interested in taking this trade. You cannot move on to then the next step. You can only move on to the next step when you have a minimum of 2 time frames in sync. It's either the weekly and the daily or the daily and the 4-hour. You cannot have it jumped over. Daily is always going to be involved, either with the weekly or with the 4-hour. So in this example, we do have a minimum of 2 time frames in sync. So cool. We now move on to the next point, which is area of interest. Phenomenal. Area of interest. We only mark off area of interest on the weekly and the daily time frame. Phenomenal. This is the higher high. This is the higher low. Start working our way down. Boom. We got 3 touches. This is the weekly area of interest. We keep going down and there's no more. So we only have 1 weekly area of interest. This happens to also be the weekly and the daily area of interest because this is the higher high and this is the higher low. Start working our way down. We have 3 touches in the same spot, which makes this the daily and the weekly area of interest as well. So in here, we can overlap or we can just add it here. So this is a powerful spot. And this is how it looks like on the 4-hour, right? So are we 1, 2, or 3? Well, we are clearly at a 1. So we cannot move on to the next step because we can only move on to the next step once and if. Once and if. Once and if we are at the area of interest. If you are not at the area of interest, you cannot move on. You can only move on to the next steps when you are at the area of interest. Can we move on to the next steps now? Yes or no? understand. How does 28%, bro? You guys better chop your neck so fucking hard right now. How does 28% of you make a mistake? I asked, I said, we could only move on to the next step when we're at the area of interest. Now, can we move on to the next step? Clearly the fuck not. We are not at the area of interest. So chop your fucking necks. I'm going to ask it again. Maybe some people out here fat fingered it or answered too fast. I don't understand. You can only move on to the next step when you're at the area of interest. Right now, is this market ready to move on to the next step? Yes or no? Or no? Where's the confusion? 8% that is saying that yes, it's ready to move on. What do you do? What don't you understand? Because I want to get into like actually using the strategy already. Dude, if they're trolls and they're fucking retarded. Respectfully. Okay, so I'm just gonna take it as you understand. We can only move on to the next step if we are at the area of interest. Again, you should be writing every single one of these things down. So right now, we are not at the area of interest, so we cannot move on. But now, when prices are pulled back into here, my blood pressure is going up. Can we move on now to the next step? Yes or no? Where is the 22% making the mistake? We are not at the area of interest. What don't you understand? For real. I don't get it. 22%. What are you doing wrong? They're trolling? All right. You guys want to troll? Oh, okay. All right. All right. All right. All right. All right. Zoom is done. Class is done. Class is done. All right. So I'm not even gonna stop. I'm just gonna keep going. So we can only go to the next step once we're at the area of interest. Right now, we are not at the area of interest. Here we would be at the area of interest. Here we would be at the area of interest. And here we would be at the area of interest. This is where you got to make sure you're constantly updating how many time frames you have in sync, because this is now the lower low and this is now the lower high. So this is now bearish, but remember, we still have these two time frames in sync. So we can continue to implement the strategy because we have two time frames in sync. If the two time frames are not in sync, the pair is no longer being interested. Cool. Now that we are at the area of interest, it is game on. Everything up to the trade not being at the area of interest is just waiting, literally doing nothing. Once the trade is at the area of interest, it's fucking game on. Like, this is now where the whole checklist takes place. rapidly. Like it literally goes bam, 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 one behind another. Like you go from confluence 1 all the way to 10 in fucking 1 second. Not literally, but what I mean is you go through the rest of the checklist at the same time. Like the only moment, like the only thing holding you back from going from the trend. Fuck, this thing's not letting me click it now. The only thing holding you back going from the trend to then the area of interest is understanding that there's two time frames in sync. So there's one blocker to go to the next step. And then there's only one blocker for you to go to the rest of the checklist, which is going to be being at the area of interest. Just want to leave that clear because as soon as I take this off, it's pretty much the whole thing, right? So once we're at the area of interest, it's game on when the price is there. Now you're probably asking, what is when price is rejecting the area of interest? So I'm just going to show you a very simple, brief example. Let's say right now we have this trade right here. Perfect example, right? Let's use USD CAD. When this trade was at the area of interest, this candlestick was, let's just say this was an area of interest. This candlestick was just at the area of interest. It wasn't really rejecting it. If you notice, if you read the Candlestick Bible, this isn't really a rejection candlestick. It's more of a reversal pattern, but it's not a rejection. This candlestick is a rejecting because the wick is clearly rejecting. So at this very moment is when now we are going to begin using the wicks because the only way to know if the price actually rejected is by the wick, is by the history the market has left us. And the history is left in turn by a wick. So this would be a rejection of the area of interest. If not, this would be at the area of interest. They're both confirmations. The rejection is obviously stronger. Another very simple and brief example. This right here is, let's just say prices right here. Prices at the area of interest. Let's just say that's an area of interest. The next candlestick is the rejection from the area of interest. When you see the wicks, long wicks at the area of interest, that's the rejection. That's literally it. Rejection equals wicks. Wicks equal a rejection. And you want that rejection at the motherfucking area of interest. That's literally it. NZD-CAD. When I entered this trade, there was a small rejection, a small little wick, a reversal pattern with this one, but then a small wick rejection. If we go and then use, for example, I don't know, this one right here, break, retest, that is a rejection of the area of interest. Rejection. When you have a wick, that is a rejection. Perfect example right here of this trade that we took right here. When price was at the area of interest, these two candlesticks are at the area of interest. These two candlesticks are rejections of the area of interest. It's basically it. They're both confirmation when it's at or rejecting. Which one is stronger? Clearly, when it's rejecting. So you want to wait for the rejection, or you can now take the trade when it's at it, and then you can go through the series of confluences. If this makes sense, say yes or say no. Very simple, very self-explanatory. Cool. So all of you guys understand. Cool. So now that we are at the area of interest, let the games begin. Right? So let's just say this is like this for whatever reason. Let's make it blue. Right? All right, cool. So Now that we understand that we are at the area of interest or we're rejecting the area of interest, what matters is that we're at it. If we're like, once we're at it, it's game on. You don't have to wait for a rejection. You don't have to. Rejection is just another confirmation. It's not going to be more percentages in the grade. It's just a little bit better. There's really no difference. I don't even want to complicate it with a analogy. It's just, fuck it. We're going to complicate it with an analogy. When you're surfing, right? When you're at the wave, it's just better if the wave is smooth, like this shit right here, than if it were to be bumpy than this right here. When you're at the wave, for you to surf the wave, you want there to be a smooth surface so it's easier. But you'll still ride that shit if there's a little bit of bumps because what matters is the wave and you're at it. So now when you go get on it, you're gonna either decide if you're gonna have I don't fucking know, closer stance or a wider stance. I don't fucking know. I'm trying to make up a simple analogy. The point is that nothing changes when you're at it or if it's rejecting it. It just makes it a little bit better. Cool. Now we move on to the next step, which is going to be second confluence. And it's going to be, do we have a, cojones, muévete, come on. Do we have a rejection or are we touching the EMA? So when you go through this checklist, we are on the weekly and the daily checklist. We just added the 4 hour here for the trend, but this is the weekly and the daily checklist. That's why I wasn't here originally. So when we are on this checklist, we are going to be checking for these confirmation on the weekly and the daily. Again, we're always going to start with the higher time frame and then go down to the lower time frame on this checklist. So are we at the area of interest? Yes. Are we touching the EMA weekly? No. Daily? Yes. That's it. Confluence number 2, confirmed. So we have only the daily. Cool. Move on to the next one. It's literally that fucking simple. Do we have a candlestick rejection? I don't know, do we? I don't know, do we? Do we have a rejection, yes or no? Is there wicks here? Yes or no? This weekly does not have any candlestick rejection. Okay, cool. The daily has 2 dojis, 2 rejection candlesticks. Okay, cool. So we only have the daily rejection. It's 10% if we have a daily rejection, and it's 10% if we have a weekly rejection. So we have both or one or the other or none. Same thing here. It's 5% if we have a daily rejection from the EMA, and it's 5% if we have the daily. You either have both or one or the other or none. There's only 3 options in this ever. You have both time frames with it, one time frame with it, or none. Very simple. Cool. Only the daily has a confirmation. Bet. Next. Do we have a rejection from the previous structure point? Jesus. What the fuck is the previous structure point? The previous structure point is the second turn on the snake. What is the snake? The snake is how you learn how to read the higher high and higher low. What the fuck is the higher high and higher low? That's how you spot the trend. What's the trend? Where's the market going? What's the market? Forex money. Okay, cool. Got it. So this would be the head of the snake. This would be the tail. First turn, second turn, previous structure point. Are we at the previous structure point? Are we rejecting it? For this example, we're at it, so we got it. For this example, where's the previous structure point? Higher high, higher low, first turn, second turn, previous structure point. Would you look at that? We have also the daily previous structure point. Cool. We'll move on. We're still only on the weekly and the daily checklist. As of right now, there's not one thing that I have not taught you that we've gone through. Next. Round psychological level. Shit. Round psychological level, do we have it? Do we not? What the fuck is it? How do we implement it? Okay, round psychological level goes inside of the area of interest. When you put the line inside of the area of interest, you just got to make sure that you have everything rounded off to the 500. If there's nothing rounded off to the 500, then we don't have a round psychological level. Okay, cool, got it. So this is at the bottom of the area of interest, 2.10000. And we'll just move the box a little bit lower to there. Cool. So we have the round psychological level there. And let's pretend like this one is the round psychological level as well. Which, you know what a coincidence it is. But obviously it's going to be the same shit because this is all the same price. Remember, this is here. It's the same thing. The round psychological level is going to be inside of the same price where like price is here on the weekly and the daily. It's the same shit. So it's at the same numbers wherever the market is. So it's going to be at the same round psychological level. There's only one confluence on that. If you want to look at it on the weekly or the daily or the 1 minute, it's the same fucking shit. So round psychological level, are we at it? Are we rejecting it? Yes, we are. Cool. As of right now, we have 1, 2, 3, 4, 5, 6. So this trade so far is having many, many confluences. Cool. So now we move on to the patterns. What patterns do we have here? So we went over very simple patterns. The patterns that we went through were break and retest, trend continuation, which were breakouts, or head and shoulders. We have the break and retest, we have the breakout, or we have the head and shoulders. Which one of these three do we have here? Any guesses? Break and retest, breakout, or head and shoulders? Well, head and shoulders is definitely out of the picture because we want to buy this trade. So can't have that. And then we don't buy on the breakout because there's no higher lows. We can't have that. So this must be a break and retest pattern. Cool. This is literally a break and retest the previous structure point. Let me actually make this down here. The break and retest structure only works when it retests the previous structure point. What do I mean by that? If you have this right here, break retest, this is not a break and retest because this is not retesting the previous structure point. This is the previous structure point, and this would be considered a break and retest only at the previous structure point. This right here is just retesting a structure point. It's not retesting the previous structure point. So this is just a retest, a break and a retest, but it's not a real break and retest. A break and retest only works when it retests the previous structure point. This one broke and retested the previous structure point, so this is considered a break and retest. Simple, easy, effective. Same thing on the sell. This retest is this right here. This is not the previous structure point. This is the previous structure point. This is considered a break and retest. This is not considered a break and retest because we broke under or above the previous structure point. The break and retest done correctly is only at the previous structure point. Very simple. Cool. So we have any patterns here? Yes, we have the break and retest pattern. Oh, dude, this trade's looking awesome. Now we then move on to the 4-hour checklist. So we're officially on this time frame now. So up to this point right now, we have literally maxed out the weekly and the daily to look for confluences. We could only look for an area of interest. We could only look for rejection from an EMA. We could only look for a candlestick rejection. If it's rejecting the previous structure point, around psychological level, or whatever pattern we have. That's all we're going to ever look for on the weekly and the daily time frame. It's very easy. We know what an area of interest is. We know what an EMA is. We know what a rejection of a candlestick is. We know what a previous structure level is. We most fucking definitely know what a round psychological level is. And now we got a little bit more details on the patterns, which we're going to break down a little bit further later into the boot camp. For now, don't want to make that the main focus. So we know that we looked for everything that we could for confluence as on the weekly and the daily. Now let's go down to the 4-hour. So notice how we started implementing all of this just because we pulled up to the area of interest. Without us being there, we cannot look for the touch of the EMA because we're not at the area of interest. We can't look for any candlestick rejections because you don't care for any candlestick rejections if we're not at the area of interest. We cannot look for a rejection of the previous structure point because we're not at a fucking area of interest. We can't apply a round psychological level if we're not at an area of interest, and you don't have a pattern if you're not at the area of interest. You can see how once you're at the area of interest, you unlock the ability to add all of these other confluences because you're at the area of interest. Cool. Next, the 4-hour. Are we touching the EMA? No, we are under the EMA. We want to be touching it above as a buy. So we are not touching the EMA on the 4-hour as that is a confluence. Do we have a candlestick rejection? For now, let's just say the 4-hour is just consolidating. No, 4-hour is not having a candlestick rejection. Do we have a rejection from a previous structure point? Right now, since it's consolidating and it's still bearish this time frame, there is no rejection from a previous structure point. The only way we can count a previous structure point is if we go bullish and then we're creating a retest at the previous structure point. That's how you can tell if we have a retest from the previous structure point. If we're creating a retest from the previous structure point in the same direction, we're trading with the higher time frames. If there is no retest of the previous structure point, there is no retest of the previous structure point. We're at the lower low. We're bearish. We're not even trading with the trend. You can only have a retest of the previous structure point if you're trading with the trend retesting the previous structure point. It's very, very self-explanatory. So we don't have a retest from the previous structure point. And then do we have any patterns? So as of right now, it looks like we might be creating a little consolidating, little inverted head and shoulders pattern, but not confirmed right now because it has not broken the structure. It's still bearish. So no patterns on the 4 hours. Cool. Remember, we just pulled up to the area of interest. Now, that is all you're going to look for the 4 hour. On the 4 hour, you're just going to look if you have the EMA in your favor. You're going to see if you have any rejections on the 4 hour, if you have a rejection from the previous structure points, or if you have any patterns. If you notice, 100% of this repeats itself here. The same thing that you looked for here. So I'm literally going to draw it once. The EMA is right here. The candlestick rejection is literally right here. The rejection from the previous structure point is literally right here. And then the pattern is literally right here. So if you know how to do it on this time frame, how in the flying fuck don't you know how to do it here? It's impossible. You're just overcomplicating it and you're trying to look at something that is not. So this is really the same checklist as the weekly and the daily. The only thing is now you're just looking at the same things you would look for on the weekly and the daily on the 4 hour. They just don't happen to be there. And it's okay. You never want to force something to be there. If it's not there, it's not there. Don't ever force something to be there. It's either there or it's not. There's no in between. It's like, oh, it kind of is there. No, it either is or it's not. You either got the confluence or you don't. You don't have a half confluence. That's not a confluence. So now that we understand that, we then move on to the most difficult and effective part, which is the entries. And the first thing is going to be the shift of structure. And then lastly, the entry candlestick, which is going to be the engulfing. So you could only pull up to the entry, which is going to be on the 15, 30 minute, 1 hour, 2 hour, once and if we are having a trade at the area of interest. Notice how you can't take a trade if you're not at the area of interest because you can only look for an area. You can only look for an entry once you're at the area of interest. Once you're at the area of interest, all this goes into place, and now you're here at the entry. So now you wait for the shift of structure and then the engulfing. So right now, up to this trade, you would have, because each one of these time frames in sync is 10%, right? So this is 10%. This is 10%. So right here, we do simple math. This would be 10, 20, 30, 35, 45, 55, 65, 75, 85, 95, 105. So that is an A plus setup. That is a trade that I'll take all day, all night. If you notice, the examples that I show you are always going to be A plus setups. They're always going to be the best possible setups that you can possibly have. I'm never going to show you examples on basic examples because I don't want you to take basic trades right now. I want you to take the best quality trades. And if you don't, like, without even noticing, I've been subconsciously embedding into your brain this pattern right here, like this pattern right here, this one. This break and retest, I've been doing the whole entire boot camp because it's the most effective one. And if you get used to seeing this, it's very easy for you to spot the higher high, and it's very easy for you to spot the higher low, and it's very easy for you to spot the area of interest. I've been doing that subconsciously the whole entire boot camp without you even fucking noticing because it's the most effective pattern that you can have to enter a trade. So when you go to the market and you see this shit, you see anything remotely like this, it just clicks and it makes sense because you've been doing it every day for the last 30 days. Now, we're now just adding confluences in front of it. So I've been embedding something into your head without you guys even knowing. One second, guys. My bad, guys. I had to unmute myself. I had to mute myself real quick. Okay, cool. So basically, up to this point, I've been subconsciously setting your guys' mindset up with these types of traits, only looking for the best quality traits. Like when you don't see a good quality trade, it's not supposed to make sense. You're kind of like, fuck, like this doesn't look like what Alex teaches. Because I've been purposely doing that because it's not what I've been teaching. I haven't been teaching you how to find a trade setup in the middle of like this right here. Even though when you see this setup now, you know exactly where you are. You know now you're at the middle of the move and there could potentially be an area of interest in here. Or you know when you're like this, you know that now there's no buys. Now you're only looking for a sell, and this can potentially be an area where you're interested in selling because this could be an area of interest. So like any possible scenario, whatever the market does, like I have trained you subconsciously to read it and know what to do. But I've been obviously setting you up with a standard of the best always. So you know that this could be area of interest one right here, and you're gonna wait for the trade to pull back into this level. You know that if that shit doesn't fly and it doesn't go good, you then have another area of interest basically right here. So like I've been subconsciously programming your brain to find these best types of trades. So if everything up to this point has made some type of sense, say yes or say no. Real poll, please. I think it froze for a second. Yeah, it did freeze. So if this has made sense so far, say yes or say no. I mean, this is great, honestly. I can't even lie. This is a lot better than I expected, which is fantastic. And it's not letting me end, not letting me end. It's a 97.3. I just don't know why it's not letting me. I really don't know why it's not letting me. I'm just gonna open up the chat because it's not letting me end the poll. So that making sense. Dun, 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 dun. So okay, wait, Alex. So the percentages don't count per time frame. You just add the percentages, or do they count one per time frame? Yes, it's a percentage per time frame. So I mean, the only time frame you guys are sharing percentages is on the weekly and the daily. So like I could do this, right? Let me just turn off the chat just for 1 second, right? Like I could do this. Let me just get this right here. And let me just do this. Like I literally could do this, right? I can do this. Copy right here. And then remove the weekly. And then come here and then shit. Like I could do this. I really, really could. But to me, it won't make any sense. Okay. So what the fuck happened? What happened? Where did I cut off? I just shared my social security and you guys didn't get it. Where did I cut off? Like as soon as I went to the weekly and the daily comparing? Yes? Okay, cool. Thank you. So let me just turn off the chat real quick. So I could do this. Where the fuck is it? Right here. Okay, so I could do this. I could literally get the daily and take it away from the weekly, but it's literally the same shit. Like it's literally the same text, the same confluences. So instead of having more shit inside like that you have to go through, I basically just jointed the weekly and the daily together because we're looking for the same exact thing that we would on the weekly, that we would on the daily. The only thing we are not looking for on the 4 hour that we look for on the weekly and the daily is the round psychological level, simply because we don't have to, and an area of interest. Everything else is literally exactly the same. We look for the EMA, we look for the candlestick rejection, we look for the previous structure level, and then we look for the pattern. It's the same thing. We just take off the round psychological level because it does not make any sense because it's the same thing on the weekly, the daily, and the 4 hour. And we don't have the area of interest because it literally does not qualify because we only look for areas of interest on the weekly and the daily. So if you think about it, it is literally the same checklist for the weekly, the daily, and the 4 hour. The only thing is that the 4 hour just doesn't have these two. Like it literally just doesn't have this and have this, but it's the same shit. It just might look like a lot because it's a lot of text. That is to me, right? But it's really not a lot. Cool. So I'm opening up the chat. Why is it 10%? Just the way it goes, brother. Why why are you using the 4 hour checklist if you use the daily and the weekly for the trend? Can you explain? Yeah, I use the 4 hour for confirmations on the lower time frame for the next time frame. What if the weekly and the daily area of interest are together? Does that make it a 20%? Yes, it does. Yes, it does. Yes, the recording is still on. Jesus, I have to turn off the chat. There's too many questions. Can you say previous structure point is an area of interest? Of course, it could be. This right here is the previous structure point, and it is the area of interest as well. I'm so confused with the percentage. You should be. It's your first time seeing it, but it makes sense tomorrow. Dope. Time to watch the recording. Yep. A lot of these questions here are literally in just the recording. The percentages, why did you give them that? It's what I've been using for the last 4 years, and I plan to continue to use them. There's nothing I'm going to change about them, and there's nothing that I would modify. They work great. Bro, this is so clear. I understood everything. Amazing. So if you had the weekly and daily EMA, that would be 10%. I mean, 5 plus 5. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yes, I would have 10, correct. Sorry for asking, why is the checklist not 5% for everything? Because it's not. I literally understand that, and I'm a beginner. This is crazy. Yep. Bro, I started the bootcamp not knowing anything, and I feel so confident. Yep, that's how it should be. It's my birthday. Can I get a shout out? Are you oh man. No, sometimes I'm fucked up, but then sometimes I can be really nice. You know what? I'm gonna sell you 100,000 right now for your birthday. I'm totally kidding. I can't. No, sorry. Happy birthday. All right. Can you show us the candlestick rejection? Yes, in just a second. I don't understand the candlestick rejection because I haven't really showed it to you. All right, so let's see. Ricky. All right, let's see what the fuck Ricky just wrote to us. All right, dude. Which I'm sure you're right, Ricky, because it's really not that hard. But I'm just gonna copy and paste this whole thing you just said. Thanks, Ricky. Thanks, Ricky, for making my night just a little bit harder. It's okay. What's up, G? I see AUD Cat is showing a great entry for sale. Only thing I saw this when the market is not in season, but I noticed the entry could have been during New York or London session. But I was missed and currently sitting at the entry point. Can you know if this is accurate? So this is great that you're having your confidences, but sorry, Ricky, right now I cannot tell you if that is accurate or not. We're not looking at entry trades right now. We just learned what the fuck the confidences are. One step at a time, cowboy. Imagine if I would be country. This would be a very different country if I was. I'm kidding. If I was 6 foot tall, man, I'd be the president of the United States of the fucking damn America. No, I'm kidding. Or maybe. Um, sorry, Joanne Luna, I already answered your question. Please stop spamming. Can you please get timestamps for every video? No. You have to be sitting down and putting in your time. Sorry. Sorry, you have to watch a video. Sorry. Yes, the 4 hour trend is 10% as well. Correct. So if we were to have the 4 hour trend in our favor up here, that would be 10%. Trust me, tomorrow's class is gonna be a lot better. I'm literally not answering half of these questions because they don't make any sense for me to repeat myself. And I don't want to make this recording too long because I need you to go rewatch it for tomorrow. We're gonna actually move tomorrow's class to the afternoon. Maybe, I don't know. Because I need you guys to have time to rewatch this recording. Alex, maybe this is off topic since you did it a couple lessons ago. We're using the no gap candlestick indicator that modifies the chart to the official chart. How do you feel about that? It minor modifies it, Marco. There's a very minor modification so we don't have gaps. So you only do the round psychological level one time? What do you think? How do we go into the scalping now, brother? People don't even understand. Some people haven't mastered this yet. Can you please get timestamps in the video? Avi, I already said no. Sorry, you have to watch the video. All right, cool. No more questions. Any question that is being asked at this point is literally going to be answered in the recording. Tomorrow we are going to be doing because I need you guys to just go rewatch that section right there that we just did probably 2 times, 3 times. It's probably like 30, 45 minutes of hardcore actual teaching of the checklist. Watch it 2 times, 3 times, 4 times, 5 times by tomorrow's 7 a.m. class. because I need you guys to be on your A game for that call. If tomorrow in the morning I get on and I feel like people aren't up to speed, I will move the class to later or to even the next day, because everything after this point is already checking the checklist with real markets. So I'm going to go into the actual candlesticks and how to do it. Like, we're literally at the final step. I'm teaching you guys how to actually now implement everything together. And then literally like 2 more calls, and then you're going to be doing it like me. So we're literally at the final stretch. I just need you to understand this last part fully. And I can't go any deeper without you rewatching it. I could go deeper, obviously. I definitely can, and I am, but not right now. It's not the right time to go deeper into it because I can't add more things into something that is not concrete in your mind just yet. It's like if you're going to go paint a house. Before you paint a house, you first lay out the primer and then you do the paint. But you can't lay the paint on top of the primer until the paint doesn't dry up. You need to wait for the primer to dry, then you can apply the paint. If you do the primer and immediately after that you do the paint, then you literally fuck up the whole entire shit. Like, it won't stick, it's not going to look the same. It's the same thing here. If I put the primer, which is this right here, and then I immediately put the paint, it's not going to stick the same. You're going to be confused. You need to first let this settle, get it, watch it a couple times, and then I can then bring and put down the paint, which is pretty much wrapping it all together with the candlesticks and then all those things. Bro, fucking W analogy, guys. Shit. Shit. So if today was a fire class, put a W in the chat. If not, put an L. Right? I know those guys, I know some of you guys had an aha moment. If you didn't, you're lying. You're lying. You're lying. You're lying. Amazing. Amazing. Quote of the day. Quote of the day. Quote of the day, huh? Quote of the day is low risk, high reward. Low risk, high reward. Low risk, high reward. That is the quote of the day, ladies and gentlemen. And another quote of the day is that analogy I just put right there. So, ladies and gentlemen, thank you very much for being part of today's class. Watch this recording, please, for tomorrow. I will not be tolerating trolls. I will not be tolerating questions that I have already answered. We're literally in the final stretch, and you do not want to waste this time with me. You do not want to not be up to date and get your questions ignored because you didn't go watch the recordings. Even if you make the call tomorrow and you weren't able to watch the recordings, get the fuck off the call and go watch the recording and then hop into the call a little bit later. Watch the recording and then hop on the live. Don't hop on the live without watching the recording. 7 a.m. tomorrow, like always, and I will see you guys then. W's in the fucking chat. If you're not cheating, you're not trying. Set and forget, boys.